Yo, 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 what is up? What's everybody doing? How's everybody doing on this fantastic Sunday morning? We are going to have a lot to talk about today. We are going to discuss the Bitcoin short that I took. We're going to discuss the Euro USD short, and then we will also take a look at this XMR short that we took yesterday. As you can see, this thing is just fallen off of a cliff. So that sounds good to you guys, and you can hear my voice and everything looks and sounds good. We will get this show on the road. Just bear with me one second. Just bear with me one. Yep. All right, we're good to go. All right, so here is XMR. We'll discuss this one real quick just because we took it yesterday. This is your yearly opening range right here. So this one is on this watch list that I have here, alts with meat on the bone. That's just alts that are basically above the yearly opening range because we know that Bitcoin is breaking down and most risk markets are taking a dump right now. So for these things to be bullish, that means that, those are potential opportunities for downside if Bitcoin continues to go lower. Now, not all of them will trade with Bitcoin there will be outliers. Bitcoin can be in a complete bear market, drop 80%, and you can still have one or two alts that are remaining bullish and continuing to be bullish. So not all of them will work, but the majority of them will follow Bitcoin if it starts to break down. And this one here we took, right? It's into resistance, big area of resistance. Over here, you can see where we were looking at, and then put in this bullish candle here. And what we were doing is we were looking for a push back up into daily resistance. If you look at this red candle right there, that's the daily. That's yesterday's candle. When we were trading up into resistance, that is where we took the entry. You can see here this stop run candle. So basically for 1, 2, 3, 4 hours you didn't do much of anything, and also put in this doji, which looks like a very bullish candle. So each time you made a resistance level, you broke above it, and then made this one here. For an hour you didn't really do anything, and then pop, that was the stop run. So this candle stopped out anybody that got short at 11, 10, 9, 8, and even over here. If their stop was above there, anybody in this whole entire section of price for hours were more than likely stopped out. So basically that's what we were looking for. Traded right into daily res. I mean, absolutely perfect. If you drop down here to the 8 hour, you're going to see this is where we took the entry right here. Wicked right up into daily res. It is also 8 hour supply right there. This push lower is what made me decide to look for this entry. All right, now there is no support levels that were broken on this push lower, but you can see the size of it, right? Now the size of that candle moving lower like that, we were looking for a retest of resistance and then continuation. It doesn't always work. Like here is an area where you got a big breakdown, right? Big breakdown. So you'd probably be watching to get short right in here where the supply level is, and you would have gotten stopped out. So that's trading, right? That's the one thing that we can't know is the future. But taking high probable entries, this is what it looks like. So essentially, when this hourly candle is pushing up into that range or into that daily resistance level, this is where I took the entry. Boom. So this is how you know when you're on the right side of the market, when the market basically reacts. The next 2 hours was dropping. Now, our original target on this trade was not the low of day because this was the low of day. And that is a long run lower to get to the low of day. So we were targeting these two regions of support, here and here. That was basically from the white line to here. If you put your stop above this wick was a 3-to-1 risk to reward. All right. So when we take entries, since we don't know what's going to happen ever, we have to have a plan. Where are we going to take profits? Where are we going to enter? Blah, blah, blah. All that stuff is very important. So that way you can take profits. Now, how much profits you take, that's entirely up to you. If you don't want to take 3/4 of the trade off, if you want to take half off, do that. If you only want to take a quarter off, do that. Just make sure you pay yourself for taking the risk. All right? You're paying yourself for taking the risk on the trade, because not all of them work. I like to take 2/3, or if I'm using KuCoin, it's 3/4, just because it's automatic. It's an automatic setting. I just click, done. But you can do the math and figure it out if you want. Just take whatever you want, right? That's going to be up to you. You're going to have to keep track of your trades, look at your data over like the past year, and see which way works better. Do you make more money if you take 2/3, or do you make more money if you just take a quarter and let the rest ride? However, that'll be up to you to decide. My whole job is to get you to find high probable entries. And this was the only short entry to take, right? Happened at 12 o'clock on a Saturday in the middle of the day. But you can definitely see that that was the right trade. All right. So that was it. That's what we were looking for. We were looking for a test of resistance. Obviously, the asset is bullish on the daily, massively bullish, super stretched out. You got divergence going on here on the daily. It's not like massive bearish divergence, because the oscillator made just a little bit lower of a high than this, but obviously price made a bigger high. And now we're into daily support. So this thing could right now find support and then get another expansion to the upside, right? We don't know what's going to happen. So we took profits at our profit target, our profit objective, which was intraday support, moved the stops to break even, and the rest is riding. So if this thing wants to find resistance again and keep rolling over, keep breaking down, get back below the yearly open, we will have basically shorted the very top of the market. And if it does continue over a period of the next month or so, as long as this doesn't come back up to these highs, you're still going to be in the trade. You're still going to be in the trade, and that little piece that you left on will make double more than the original position that was taken. So basically, being an intraday scalper gives me the ability to get into these swing trades, right? That's the ultimate goal, but 95% of the time, the intraday positions do get stopped out. That's because we are taking, entries at severe edges of the ranges, like at the very top. So market might want to go up and strafe this liquidity before it runs over. And if it does, then it's going to come up and stop us out of the trade. And that's okay, because the whole objective, the whole mission from yesterday's entry was to take profits right here. And that's what we did. That trade is completed, worked, done, over. All right, so moving on. It does look great though when you get this kind of continuation, because that just lets you know that you're definitely on the right side of the market for now. But it could all change, right? It could definitely change. So let's go over here to Euro USD, and just bear with me a moment as I have to find it. All right, so here it is. So this is resistance. Price is trading up into resistance on the hourly. Okay, then you get this massive push lower. So that shows us that, yeah, that resistance level is holding. This is your Asian session, and this is the London session. So let me put this over here like so. These three candles, that's the very beginning of your London session. And then if you put a line on here, you'll see that there's your hourly res. London session trades up into it, just above it, and then just above that one. It's just barely above it, and then boom, down. So that's essentially not a real good stop run, but a stop run nonetheless. And then you get your impulse leg to the downside. This is where I was watching for the trade. All right. Let's see here. So this is going to be, since this resistance held and you got an expansion down, this is the new resistance because it's lower, but it's still the bullish close. So we're going to bring that over there. So there is your daily res. And then the only two levels I was watching on this chart during the New York session was daily res and then the daily open. So if we come in here, this is my entry right here. So same thing, 7 o'clock, you're trading up, right? Then you put in this candle here. That's 8 o'clock candle. Then the 9 o'clock candle opens and you get this massive push right here. So we're gonna circle this in green because these 3 hours is what we're looking for our trade entry. We do know that we want to look for short entries because of this massive rejection, and then the London session had another stab lower. So we knew we were looking to go short here, but we wanted to wait for, a stop run or at least a rejection off of resistance. So once you start trading above your swing high, and this is your swing high that I am referring to, this candle here. Once you start trading above that, then, it's a little bit risky because you don't know if it's going to close above or if it's going to go, be a rejection or a stop run. So this is the only time where I would suggest looking at a 5-minute time frame, right? So we can see here, like, people that are trying to get short this thing and they're only watching the 5-minute time frame. This is why watching the hourly chart is like an edge in itself. Just getting off of the 5-minute, not getting trapped in thinking that, well, this is resistance here. Well, it technically is on a 5-minute time frame, but then this happens right here. So this candle, this push higher, you can say that it pushed up into this if you want, but this was nothing more than to stop out people that got short here, 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 here. Anybody that got short there, that's what this was doing. Just running above those stops, pulling in all that demand, because that's what it is. If you're getting short, then you have a buy stop loss. It's a buy order. So this pushes up into, triggers all the buy orders, and then the market participants sell into all that demand, or all that, demand. And then that creates this right here. So taking the entry on this spike is risky for sure. So if you take the entry, you're basically watching, daily res right there. That's daily res. Let me go back over here and show you. Or no, that was the open of the day. Apologies. And then the second white line is your daily res. Back into the 5-minute over here. So this is your open, daily open, and then up here's daily res. So if this continuation is going to happen, a test of the open should be a good area for rejection or an entry for continuation lower. So as soon as that happened, I deployed a short position, boom, down we went. And it happened across the board, right? Happened across the board on Thursday and even into Friday. You have the SPX made a phenomenal daily bull trap, breaking above and closing above the 21 exponential moving average, then getting a higher push. So when we were looking at this in the morning, this candle was green, right? It just had a little bit of a tail lower, but it was trading up and it was green. So your daily candle was bullish. And then it went up, found resistance or wherever shorts got excited, and boom, right back down. And then Friday, this expansion lower had to do with a bit of news. It was due to the Israel basically dropping some dollars in order to buy the Chinese yuan. Thank you, Nick, for that. He posted the article in the Forex channel. I didn't know anything about it, and that's a fantastic read. Basically, Israel's dollar reserves was 66% of their portfolio. So basically, the Bank of Israel was holding 61% of their portfolio in US dollars, right? That's a big risk because the US dollar right now has month over month rising inflation, and it's not slowly rising, it's rising fast. I mean, you're getting like a point 0.5 points on each time. So it was like back in the day, it was 6-1, then it was 6-9, then it was 7-5, then 7-9, then 8, what, 6. What's the next one going to be? 9-2, 9-4. You know, it's going up fast. So basically, they manage their risk by dropping some of those dollars, and that's not bullish for the market. If we already know that Russia and China are looking to basically become friends or allies and start doing business together. Russia and China. Russia is a massive producer of oil. The U.S. is stupid if they think that they can control Russia's economy by, putting these stupid things on them, because they're just going to ignore it, right? If they can get the Chinese to buy their oil and other products, other goods, other services, then they'll just do business with China. And the U.S. dollar's reserve status, or the reserve currency of the world is under threat. So if the Bank of Israel is dropping dollars to take and buy Chinese yuan, then if other central banks around the world start to follow suit, that's going to look really, really bad for the U.S. dollar. Now, I don't understand why that would be bullish for the dollar, but it obviously was. And it was obviously very bearish for the markets. That's the only news that I seen. I did look at Bloomberg and other things to see if any other important news came out yesterday that would have caused a massive move like this. So the only thing that I can see is that news. And then basically all the people that were stuck here, anybody that got long here at support, they are now underwater. So those positions start to get closed, and that creates more supply into the market, because to get out of a long position, your stop loss will be a stop order or a sell stop. So when the price starts to trade down, starts to trigger more of those sell orders, it's just cascading, right? It just causes more and more downside pressure. It's basically a long squeeze is what you got going on here, and they can last for days, right? This is just the beginning. Next week, this thing could be trading well under these lows down here, just depending on how many people were stuck here, because this was a very, very aggressive rally. Right? Very aggressive. Everybody thought, the bear market's over, but not us. Not us. But anyways, over here to Bitcoin, because this was a very risky entry. I did not bring it up inside of the Discord because I didn't love it, and I wasn't taking the entry based off of, anything other than daily res. And then there was a little bit of divergence on the 2-hour and the 4-hour. And the SPX was also printing bearish divergence on the hourly and the 2-hour. So I was like, well, if it's going to go lower, I think right up in here would be a good spot to do it. If we go over here to the hourly time frame, you're going to see that I pretty much damn near top ticked this thing. So my entry is about midpoint of this bullish hourly wick, right? That's where I took my entry. And my stop was just above the swing high, where the swing high ended, because it was still going up, and it did look like I was going to be stopped out. But it did roll over right in front of my stop loss. And then boom, straight down. And that's fantastic, because this is also what was transpiring at the same time on dollar was getting bullish, hence the short on Euro USD. And the SPX was also rolling over as well. But if I pull up the RSI here, and let's use our bar replay, because this is what I was looking at when I took the trade. Well, actually, we need to go back one more. So this is what I'm looking at when I'm taking the trade. Nice big bullish move, trading right up into daily resistance. Also, if I go back to the daily real quick and just put on the exponential moving average, because that is what we were looking at, right? That's what we were going to base our directional bias off of if we did indeed get that close above the 21 on the daily, all right? So that's what we were looking at. So when I seen this bullish reaction, what I was assuming that this was nothing more than a stop run. Here is your high overbought regions on the hourly chart. Over here, you can see that you got divergence printing. And then the next candle will go one more. Then you get up a little bit there on a closing basis. And then boom, still lower. There's your divergence. Here's your 2-hour. Big push higher right here into this, then you pull back, go up, run the stops. Here is your divergence right there, 4 hour. Same scenario. There's your spike in price. Then you get this, which is a trap right here. It's making people think that you did break down below support and you are going. And this trap took at least 4 hours. It could have taken 5 hours to build because these are 4 hour candles. So this 4 hour candle closes below support. Then you have a whole nother 4 hour session that happens and closes lower. So it does indeed look like price is going to break down. Pull in those shorts, get them stopped in here. You got this supply zone right there. I mean, it's just absolutely beautiful for a short entry, right? But then this occurs, boom. So a lot of people took that short. I was waiting for the daily res. And based off of the divergence that was being thrown in on this and the simple fact that overall you're in a downtrend, right? If you go this far, then you're in an uptrend, right? Higher lows, higher high, higher low. So a lot of people were expecting Bitcoin to continue with this is what people kept telling me on Twitter, on YouTube, everywhere. But higher highs and higher lows, bro. Higher highs and higher lows, bro, right? But I'm looking at the year-to-date time frame. Year-to-date. Year-to-date, this thing is bearish or sideways at best. Even though you have, higher lows and higher highs, this thing is still bearish. We were looking for a yearly open test that set the whole narrative for what we were going to be looking for the next quarter, which was more downside if you cannot control the yearly opening range. If you cannot maintain being bullish on the year for more than 3 to 4 days, this thing is a lot weaker than people give it credit for. So that's why we're short. So once again, just traded right up in the resistance. And it was another, it's just one of those things where it's like, I don't know what price is ever going to do. I could have been stopped out on that trade and then watched this happen right after my stop got 8. And that will happen in trading. It's going to. It happens to me still to this day. I still get stopped out. And then 5 minutes later, 10 minutes later, watch price it just means I was early, right? Instead of looking at that as a bad thing, use that to your advantage and say, well, how can I have made that trade work, right? Could have been a little bit more patient, could have waited a little bit longer. So that's basically the whole mindset that I was going on this day. Just watching that divergence build. And then back over here to the SPX briefly, I just want to show you same scenario. Here you got swing high here. And then this push up above the swing highs, liquidating all the shorts, all the early shorts, getting above daily res or whatever that level is. But you got your divergence right there. And then here's your 2 hour swing high right here. And then the new high on price, lower high on the oscillator. That means that it's losing its momentum. And in order for a bullish push to continue, the circumstances are much better when the oscillator is making, the same as what price is doing. So when the oscillator starts to change from its functions, it's mathematical, it's different. Something is changing. So this was being looked at by me as simply just a stop run, right? I knew it didn't have, or I thought that it wouldn't have enough steam to keep going higher. As you already ran those stops, you did find support there, and you're just getting this push. But, I really don't pay too much attention to the RSI unless it's doing something like this. I don't usually use it to make my bias, but I had a bearish bias. But it did look like this thing was getting ready. These were going to start ripping soon. But we also know that, traps exist. I teach you guys this all the time. Just because you get one daily close above the level that you're looking for or trying to take trades around, one daily close sometimes just isn't enough. In order for it not to be a trap, you need that bullish close, and then the next day you want to see continuation, right? You want to see a higher high put in, higher than yesterday's high, but you did that, right? So it did look like it was going to be bullish continuation, and then just dump. I mean, massive dump. Friday was a big down day. That's a big candle. And if you look at it on the intraday chart, it's just gnarly. Just straight down, man. And this is during the New York session as well. There's your London session here. New York session, 8 a.m. Resistance was holding on the hourly, guys. Right there. I mean, yeah, I mean, it's hard to decide if you want to take the trade or not. That's going to be up to you. I can't give you, I can't tell you where to take the trade, where to put your stop. I'll tell you where I do it, but I can't tell you where to do it. I can't tell you if you want to take this entry or not. Because if it doesn't work out, then that makes you have the ability to blame me for being wrong. And it ain't about being right and wrong. Trading is about taking entries at high probable areas. If you eat a stop, then that means you're on the wrong side of the market for that day. That's it. There's nothing more than that. It happens to me all the time. All the time. I'm not always right. But fantastic move lower. So I think you're going to see more bearish continuation on Bitcoin, on the SPX. The dollar's ripping, right? Just ripping to the upside. Came down. That's daily support right there. That looked exceedingly bearish going into daily support and just ripped right back out of there. There was also on the daily, the 21 exponential moving average setting there under daily support as well on the DXY. So let's get rid of all the levels that don't matter. This is support. There's the 21. There's that test. And then boom, straight up. This thing is bullish. And as long as it's bullish, other things are going to start to rip lower. You are printing bearish divergence on the daily time frame on the DXY right now. So there is a chance that this thing does start to roll over again. But I think this was the move. It just happened so quickly, so briefly, so quickly. I mean, that wasn't even enough to get this thing down even there. Like this one was, this push lower. You broke down below support. You're right at the 50 though. Right at this. Then the next day happens and you close right back above the 21 exponential moving average. That's a bullish signal. Because if this is going to be bearish, upon breaking down of support, this should test that old support and then roll over. But if it does and keeps going, then something else has changed. And if the direction is bullish, it's bullish on the year, you're looking for bullish entries until that changes. Until the 21 is above price and price is going lower and the 21 is caressing it, the swing highs. Those swing highs are your entries. These swing lows are your entries. Those are the entries that we look for. Close to the 21 exponential moving average in the direction of the trend is it's usually going to be a good entry until you start doing shit like this. When you start doing shit like this, then that 21 exponential moving average is 100% useless. But as long as there is trending conditions, like multiple entries right in here for bullish trades. I know I'm looking at this in hindsight, but you can do it yourself with this tool, all right? I do look in hindsight a lot because hindsight can tell you, it can help you dictate strategy and biases. But you guys have been following me. Most of you have been following me long enough. A lot of you are in the Discord. You definitely know that I mean what I'm talking. I know what I'm talking about, right? 3 killer trades in the last 3-4 days. Just bam, bam, bam. Short in the very top end of the range. You almost couldn't have got a better entry. So, and that's 3 out of 3. Boom, boom, boom. XMR yesterday morning. I look for the same thing over and over and over again. Always. I'm doing the same thing over and over again. Very consistent. And you need to bring consistency in your trading. Once you can get that consistency, then profitability will come. Mr. Brian, are you in the chat? I don't see him. Just give me 1 second, guys. If he is here, he has not spoken, but I'm going to go ahead and do this for him. So I don't know if any other of you guys watching the replay later, if you're trying to trade Forex on Thinkorswim, I don't know. I don't take all my Forex trades come right off of the TradingView platform. I have two different brokers, Forex.com and Oanda. And basically, I just take the trades right off this platform. That's why I have my Forex money situated on an actual Forex broker. Thinkorswim does have a Forex, like you can trade Forex on Thinkorswim. I was looking at it. I don't have it loaded on this new PC yet, so I can't do it. But I did look at it this morning on my laptop, and it appears that the lowest risk unit you can use on Thinkorswim is 10,000 units. 10,000 units on a $100,000 account. A 25 pip stop loss is $25. All right. But depending on the size of your account, you can use TradingView to basically help you manage a position or find a position size, because position sizing is different for a lot of people. Let me go ahead and bring this up real quick. Just bear with me 1 second. All right, so here. This is the position sizing formula. All right. If you guys have trouble or you're trading on a platform like KuCoin or something else that does not give you a position size calculator, this is how you calculate your position. You take your net liquidation. Your net liquidation is the amount of money you have on exchange. If you have $100 on KuCoin, your net liquidation is $100. If you have $100,000, your net liquidation is $100,000. So your net liquidation is the amount of money you have on exchange, your total trading capital. All right? And that is times your percent risk per trade. If you want 2%, then you times $100,000 times 2%. All right? 2%. Then you take that number and you divide that number by your stop loss distance, which was 25 pips, 20 pips, 15 pips, 100 pips, whatever, times the value per pip. So this number and this number, you divide it, and that gives you the amount of units or lots to trade. All right? That's how you do it mathematically. This formula right here. I'll leave it up for just a second, but that's it, right? That's how you do it. So basically, if you don't want to do that, you can use EURUSD. Make sure these numbers or prices. I checked on Thinkorswim on this. You can see that it closed on Friday at 1.07989. On Thinkorswim, it closed at 1.0795. 95. 3 pips, right? 3 pips difference. So make sure you keep an eye on that. But you can just simply bring up this window right here. However much money you have on exchange, you're going to basically use this to calculate your position size. That's going to be your stop loss in pips, 25. So if this is a $100,000 account, which it's a $98,000 account, and I want to risk 25 pips, then right here I just type in 1, as that is the percent that I am looking to risk. And it tells me right here how many units I need to buy. So that is 3 lots, almost 4 lots, or 395,000 units. If you're like Thinkorswim uses mini lots. So there's 3 different lots. You have your standard lot, which is 100,000 units. That's one standard lot. Then you have a mini lot, which is 10,000 units, and then a micro lot, which is 1,000 units. So Thinkorswim uses mini lots. So you can only go as low as 10,000 units. That's a $25 risk on a 25 pip trade on EURUSD, right? And then obviously the more units you go, the more you're going to be risking. But on a 25 pip stop loss on a $98,000 account, I am risking $987, which is exactly 1% of the account. This tells me how many units to take or enter into the position with to make sure that this parameter is met. To make sure that when my stop is hit, that I only lose $987.91. If you just go up to 2%, this changes drastically. Now I'm risking $2,000 on 2%, all right? Double. That's why percentages are so key, and it's so crucial for you guys to learn how to position size yourself without using a calculator, right? If you can do it by yourself with math, you don't need a calculator, then no matter what platform you're trading on, you're always going to be able to calculate your position sizing as long as you know where your stop loss is going to be. And that is everything. Thinkorswim does have a tool that will count the pips, just the same as this counts pips. Just by pushing shift and right click, that counts your pips on TradingView. Thinkorswim has one too. It's in the toolbar. You click it, it brings up a little row, you know, the two little rows of tools, and it's like down at the bottom, it's like a line measure or something measurement. It measures how many days, how many hours, how many pips, how many everything. So that's how you get your pips, right? That's how you get, you know, the amount of pips you're willing to risk on the trade. So we'll use this as an example. Say I want to go long here, but where's my stop going to be? Well, over here, this swing low, that's the lowest one. So let's say I want to get long at support, at 2-hour support. Then my stop is going to be below this swing low right here. All right. I can't do that because it was in the way. Right there. So that's 19.3 pips. So just round it up, 20 pips. Right there, 20 pips. All right. Then you pull up this. You want to buy it. You have a $10,000 account. Let's just say you got a $10,000 account. You want to know how to do that. So basically, you know you want to risk about $25. You can fill it in this way, pips. I mean, this thing can be used to do, this is your money, the amount of money, all that stuff. You can use this to basically get a guide. I don't trade Forex on Thinkorswim, so I'm not exactly sure how to do it. I will learn it. I got a lot of stuff to do first. But I will learn it, and then I'll put out a video trading Forex on Thinkorswim. I use Thinkorswim to buy stocks and trade options. So and like crypto, for instance, I don't trade crypto on Thinkorswim or, you know, any other brokerage like that. I try to put the money on the exchange that I want to definitely be trading on. So that's why I switched from Kraken to KuCoin, you know, basically because I can trade on KuCoin. Where on Kraken, you got to have $5 million on the exchange before you can trade leverage. And I'm not trusting $5 million on any one of these exchanges. That is never going to happen, right? You can take a small amount of money, like $20,000, $30,000, and make a good living off that. You do not need to hold millions of dollars on exchange to make good money doing this. You do not have to do that. You can make damn good money with a $20,000, $30,000 account. Damn good money. All right, so that's that. Position sizing, net liquidation times risk per trade divided by stop loss distance times value per pip. All right. And that's that. All right, so what are we looking for on Bitcoin to continue the week? Well, we're going to be looking for this thing to continue to go in the direction. A lot of your indicators are burned or are, you know, on the lows, but I'd only really focus on the RSI. A lot of people are telling me that this one here, which is going to be, let's get rid of, what is this? This one, the Stokes on Bitcoin. Let's go. Daily Stokes are burning, right? They're burning the lows. This is why people are assuming that Bitcoin's going to bounce. Your RSI has a ton of room because here's the low. The last time you had a big stab lower, all the way down to 19.76. You're at 39, so you can go all the way to 19 before this oscillator is overcooked on the daily. that could be way below $32,000. You know what I mean? Before that happens. But this indicator was burning the lows. It definitely was. But I wanted to show you this right here. All right, this section of price. This is your first stab lower on price. This is the all-time high. So you had 1, 2, 3, 4, 5, 6 days that, or 4 days that were bearish, then 2 bullish, then 2 bearish. And on this day, that's when you first hit oversold regions on this indicator. All right? And it grinded the lows for this long, but notice price going lower, even though it's grinding oversold, below oversold. And then here you're bouncing off of oversold, but you're not really going up. You're just bouncing off these lows. So this indicator was cooked for this entire move lower right here. That's what I'm trying to show you, all right? Yes, this indicator is cooked, but we could get another section of price that lasts for weeks and goes lower. This thing will just bounce around the lows. Just keep bouncing around, oversold in the low, oversold in the low, oversold in the low, oversold in the low, until finally you get, 3 days of bullishness, and then this thing will be pegged out to the upside. So this is why I put more faith on the RSI, right? The stochastic indicator is a good indicator, and it can help you, stay out of troubling positions. For instance, you necessarily don't want to go long when you are overbought. And the same scenario for oversold. Right? You definitely don't want to be taking a short into support. Price alone will let you know that. There is support right there. We're not looking to take shorts into support. We're looking to take shorts at resistance. Resistance is where you look for your short entries, and then you just ride it out. Hopefully it drops lower and you get many days of continuation out of the trade. But in the direction of the trend, you are looking to sell resistance. And if you're in an uptrend, you are looking to buy off support. Even in a downtrend, if you want to just buy a bullish pop or trade a bullish day, then you're still looking for support. You still want to wait on support. For sure, always. Sell into resistance, buy at support. You're into support now. So if you're bullish on Bitcoin, if you want to go higher, then you buy it here or as close to 39,535 as possible. And then you figure out where you want to put your stop. The more wide the stop is, the smaller position size will be. So that means you will need twice as much distance to cover in order just to get a 1-to-1 risk to reward. Hence why I decided to figure out a way to become a day trader, so that way I can make that stop loss very, very narrow. Yes, I'm risking or taking massive positions when I take these entries, but I'm still only risking 1 to 2%. Only 1% ever on Forex. Crypto, sometimes I'll risk more than 1%. All right, crypto is it's the Wild West, and yeah, I'm still basically learning on KuCoin Exchange as well. I just started trading on it, I don't know, 6 months? So a year, tops. Yo, what is up, traders? Good morning, Aaron. I only trade BTC and ETH futures now, holding spot alts. Got you. There's nothing wrong with that. Nothing wrong with that at all. If you want to try to learn to trade on KuCoin's inverse swap contract, my advice to you would be just take $100 of Bitcoin. If you already have a HODL account of Bitcoin, just send $100 worth of that Bitcoin over to KuCoin, and then just favorite the Bitcoin inverse swap contract, and then just trade it, right? Because it's more difficult to calculate position size with Bitcoin though, because if you got $100 of Bitcoin, what is that going to be? It's going to be like 0.00004 or 0.00003. So to only risk 1% of that, yeah, it's different. It's difficult. You're going to have to use math, but they do have an autofill of 5%. So like if you're going max leverage, which is 5 in America, on Bitcoin with $100, so you pull your slider all the way to 5, and then you hit 5%, 5% as your stop loss. That means when you get stopped out, you will lose 5% of your Bitcoin position that you have on exchange. All right, it's the entire amount that you have on exchange. That's the only automatic one they have. And 5%, in my opinion, is a lot to risk. I mean, you only need to lose 20 trades in a row for that to be completely gone. And 20 trades ain't shit. Not if you're taking, 10, 15 trades a week, anyways. I don't do that, but a lot of people do. A lot of people are very active traders. And it's just because they don't know what they're quite doing yet. That's all it is. You just need more time in the market. You need more patience with yourself because you are learning, right? Quit trying to beat yourself up and think that you got to make this work today. And if you are in that situation in life to where this needs to happen for you, like right now, or something bad's gonna happen, then you might as well brace for that something bad happening, because the only thing you're gonna do is you're gonna end up blowing all of your risk capital trying to make some unfeasible thing happen. It's not the way it works. Trading is about taking trades at high probable areas, and over time, as long as you manage your risk over time, you just make money, right? So you have to look at it that way, and stop looking at it in terms of right or wrong. Like, I got short there, but I wasn't right. The trade worked, but it wasn't anything I did. It was just simply taking a trade at a high probable area. And we see these areas work time and time again. Time and time again. Here's one right here. Daily res on this day, trades up in the daily res. That's your short entry. And it worked out flawlessly. Boom, boom. For 2 solid days, you got this. Over and over, I can do this. Daily res, entry, short. Well, it worked out if you took profits here, right? From there to there. But if you would have held it, you wouldn't have got stopped out. You would still be in it. But over and over again, I can show you stuff like this happening. And on smaller time frames. The closing of the candles on a bullish candle is everything. It's everything. It's not just something. It's everything. That is a flawless, beautiful entry. You didn't get it here, but this day you did. And that does 2 things. It liquidates these people, and you're testing resistance. Same time. Boom. See ya. That's all it is. Learn to look at the daily and hourly charts. You can look at 8-hour and 4-hour charts if you wish, looking for, that daily resistance just happened to be 8-hour supply. Stuff like that. But I mainly focus on the daily and the hourly charts, guys. I'll go down to the 5-minute chart. If I'm watching a specific level that I am looking for, like just a touch and a rejection like that, then I will watch the 5-minute chart, because it gives me the ability to see, hey, you've closed 2 5-minute candles above that. If the next one don't start to drop, then you're probably going to close an hourly above the level. That's the only time I'll use a 5-minute time frame. And I also use the 5-minute time frame here on this trade when we took this section of price, when we took that short. I used the 5-minute time frame there as well, because it didn't go up. Oh no, I'm sorry, it was up here. That's where it was. I forgot. That's where I was watching the 5-minute chart, because this was breaking down and I wanted a retest. I don't think I can go all the way back there, can I? Yeah, I can. Beautiful. This is fantastic. Please be there. Please be there. Please be there. There it is. Awesome. So that's the level that I was looking at right there. That's the day. No, that's not right, is it? Hang on, guys. I'll get this. What was I looking at? Hourly. Okay, so it was that daily level because it was this breakdown right there. That's what I was watching for. So let's go back to the 5-minute chart, because I was watching that and I wanted to see an hourly spike up into that daily level. Come on, man. How far is this? I wanted to see that hourly spike into that daily level once we broke down. You got it there, but I was kind of watching it here. It just didn't happen. What was it? No, maybe it was an hourly level I was watching. I think I was watching an hourly demand up in here. There's the daily level, but I was also watching an hourly demand. And when this broke down, I wanted to see if an hourly candle come back, test the hourly supply, and then roll over. But I was watching the 5-minute chart. I was watching these 5-minute candles. And then when we got here, right in here, and then we pushed up, I just, I was like, screw it, I'll go ahead and take it right here. It doesn't look like it's going to go. Then this candle closed, and then the next candle came in lower. So it just looked like it wasn't going to go up and give me that test and then roll over. So that's about the only time I'll use those 5-minute time frames to basically validate or help me see price go up and test that level quicker. Or if it's not going to happen, like, there's 5-minute resistance. If you can't close a 5-minute candle above 5-minute resistance, then it's probably going to roll over, especially if you've got a lot of momentum coming into the market. That means something occurred. Either some bad news happened or something happened, but then the sell side just opened up. And then that was it. That was the only chance you had to enter this trade on breakdown. 1, 2, 3, 4, 5, 6, 7 minutes. 7 5-minute candles. 5 and 6 is 30, so you need more than that for an hourly close. 9:15 to 9:45, so 30 minutes, and it broke down. So you didn't get that hourly test. So watching the hourly time frame and looking for that level to be tested, you would have missed the trade. And it's okay. You're going to miss trades. I miss trades all the time. I can nail sometimes 3 to 4 trades per week, and that's max. Like, that's max. And if it's a really good trade, I probably won't even trade the rest of the week. If it's a really good trade. Like that XMR trade, that's 11 to 1 risk to reward right now. 11 to 1. So we essentially nailed the very top tick of the down move. And we're in the daily support now, so a bounce is probably coming. Not looking to get short again, but this is a monstrosity of a trade. Where price is currently 11.3 to 1 risk to reward. Like, that's phenomenal. Now, I didn't make 11%, right? The trade would have made more if it's 2%. That would have been, a 20% gain if you're still holding it. But if you take profits up in here, then it's more like a 6% gain. Now, on KuCoin, for some reason, if you shed the position, when I say shed the position, I mean like snip a piece of it out, take profits, leave a little bit on, it'll still show that you're up, 40%. Even though you're not, right? Even though you made 6% on the original take profit and you got like 1/3 of the position left on. So that's probably another, 2 to 4%. But it'll show that you're up 40%. So it's just one of those things. I don't know. KuCoin's a little clunky at times, and I wish they would put a position size calculator in there. It would make my job or my life a whole lot easier. Because people don't want to, they just physically don't want to do the math or figure it out. Racist. Congrats on that. Thank you, my friend. Good morning, everyone. Good morning, Cassidy. Shit gonna be epic. Nick Cage about to foil the bad guy plot. You have to share the music, bro. Oh, yeah, I can share my playlist. It's just, it's what do they call it? It's cinematic tunes that I got from Epidemic Sound. But I can share it. I still have 1/3 on. Yeah. I'm still holding a piece of it too. I will hold that piece until it either gets stopped out or continues to go lower. And that's another thing. When it becomes a substantial amount of money for you again, then take half of that. You can keep taking it down by half to infinity, right? If you just take 50%, 50%, 50%, 50%, you're always going to have a piece on. Eventually the position will get so small it won't matter to where you'll be like in $1 or $2 worth of profit. So, I mean, then you just close the whole damn thing out, unless you're trading on a very small account and $2 worth of profit is a 2% gain. That's different. But what I mean is, like, the way I'll do it basically is I'll take a position. When I hit my daily goal, boom, I exit the position and I leave 1/3, 2/3, or I take 2/3, leave 1/3 on. Or if it's for KuCoin, then I'll just leave a quarter on. Now, if a few days goes by and it's just still burning in the same direction, and then, that 1/4 is now up to about the same amount of money that I took when I took the first entry, I'll go ahead and take that off again. You know what I mean? But I'll just cut it down in half. So, and at that time, then it's going to be a very small position, and you're going to need like a 6-week or 6-month directional move in order to make any money on that. But you can still leave it on. It's not hurting you, unless the position is so small and the funding rate is literally taking away from your gains. Then obviously close the position. Right? If the funding rate is smoking your profits, close the position. Now, I had one guy ask me one time why his profits were getting smited by the funding rate, and the funding rate was 0.001%. So that means you're paying 0.001%. That's 1 penny on $1, or $1 on $100. Or, you know what I mean? Keep on going and going and going. So, like, if you're going to literally complain about what is the settlement period on KuCoin, every 8 hours, they take $5 from your trade. Seriously? If you're up thousands of dollars, you're going to complain about $10, $12? Nah. Then trading isn't for you. You're not going to be able to just literally nickel and dime it like that. But that's the way the brokers get paid, is they get paid off those funding rates. They get paid off the spread. They got little liquidity providers that they have to pay. These things wouldn't be anything without liquidity providers. You would not be able to trade if it weren't for these firms, these market-making firms. The bad guys that everybody likes to blame for their lost trades. If it weren't for market makers, you would not be able to trade. You need liquidity to take a trade. It's a zero-sum game. That means there's a trade. There's a buy for every sell, a sell for every buy. If there's not a buyer, like you can see this sometimes in penny stocks, where you buy one of those epic low floaters, and you get long in it, and price goes away, and then it dries up to where it's like literally not even moving ever. Maybe get a candle that looks like, just a blip on the radar, and you're setting in there with a limit order to sell, and you can't sell. You can't sell because there isn't no liquidity provider in there. There is no market maker in that little ass stock. You literally need to have someone buy it from you, and if someone, or sell it to you, or whatever, you're trying to exit your position. And then you might get lucky and get like 100 shares off, right? Someone might come and you're trying to sell 100 shares at this price. Maybe you get lucky and someone comes and buys 100 of those shares from you. Then you still got 4,500 shares to go. Don't trade products that don't have liquidity, guys. If they don't have liquidity providers in them, you will get stuck in that position. You cannot exit. That is never going to happen in Forex. I don't think it's going to happen in crypto, but it can happen in those low floaters. If it's a light exchange, like some NFT project on some random exchange that doesn't have liquidity providers, then yeah, you can absolutely get stuck in that too. There's always somebody wanting to sell. There's always somebody wanting to get out of their position. So you'll be able to get into it. Getting out of it will be the problem. Long short position tool can do this. Just enter your account size and risk. Yes, there's tons of them. There's free ones out there. Free position sizing calculators. For brokerages not to have it, it's ludicrous to me. Like, seriously, in this time age, you cannot put a free position size calculator on your platform. It's insane. XMR short, dang, I missed that. Yeah, it was a good trade. A very good trade. Good morning, good morning. I often don't have time to day trade. What would entries look like if primarily looking at monthly, weekly, daily candles, no hourlies? You're gonna take your trades. You're gonna have to figure out a time when you want to take them. So you're gonna have to set alerts, right? I can take trades based off a daily time frame. I never have to go into a lower time frame than this right here. I can just simply watch a daily candle all day go up and down and up and down, up, down, up, down. That's what it does. It just goes up and down, up and down, up and down until the range fills out, and then you have your close. But if you're trading based solely on the daily, then you're going to want to set alerts. So that way, while you're at work, you get an alert that says, hey, price just dinged support. Do you want to take an entry now, or do you want to wait? That's going to be up to you to when you want to take them. I heard of one guy that takes trades at the end of the day every day in Forex, which is oddly enough the worst time to take a trade in the Forex market is at the end of day or market close on the candle closure, because the spread opens up to like 20 pips on most pairs and on most exchanges. Now, he trades for a prop firm, so, maybe his prop firm has something worked out with an exchange so that way their spreads don't blow up at the close of the day, but he only swing trades and he only takes position at the close of day. Now, I don't know his strategy, right? I don't know him that good to where he told me the way he trades or anything, but he only takes trades at the close of the day. So what you're going to want to do is you're going to want to take entries, like if you're looking to go long at support and you've been trading sideways at that support for multiple days. Look, there's 4 days in a row you're trading at support. Then basically you just want to set a timer or something, or just throw a position in there and manage your stop loss. Same scenario. You're only going to want to take about a 2% risk max, because even though you're only taking trades at the end of the day, you can still take up to 7 trades in a week. That's still too many, right? So, but always only risk no more than 2%. No more than 2%, because you can get on a losing streak that lasts for weeks. Because we don't know what price is going to do, ever. It's just math and probabilities. So what you would do if you think you got more bullish on this, which I wouldn't recommend that, because this thing especially has been cooking oversold for a long time. I mean, overbought even on the RSI. So I wouldn't be trying to get long up here. Now, oversold or overbought can stay overbought for a long time, but you're looking to buy low and sell high. So you don't want to buy if you're overbought. You want to buy when you're oversold. That's when you're looking to buy. All right? Because you're wanting to sell high. So you're basically wanting the indicator or price to trade sideways, let you get an entry, then start to expand away from your entry in the right direction. So if you're trying to take longs when you're overbought, they're not going to work out very often. Like, here's a day on XMR where it was nice and bullish, super bullish, and then boom, pinged daily resistance and overbought, and the very next freaking day it rolled over. The very next day hit overbought and resistance, and one day, the next 3-4 days was just straight down. That doesn't always happen. Here's a section of price where it didn't. Boom, resistance, 1 day down, and then 4 days later, you're right back at your entry. That's not your fault. That's price action. That's what it does. It's impossible to know what's going to happen. But you know that these are higher areas that you want to look for those entries. So like right now on Bitcoin, the best thing to do would be to wait for support and buy it, right? If you're long or if you're in an uptrend. But that's the key right there. This thing isn't in an uptrend. At best, it is sideways. At best. Okay? So if you're looking to be a buyer, you want to buy support. I wouldn't look at this indicator. I would focus mostly on the RSI myself. I put more weight on this indicator than any other momentum oscillator. This one is my favorite because this one, is pretty good. So you're tagging overbought regions. You typically, that's a lot of people will say you don't want to short an overbought market because it can keep going up. And while this is true, over the long term, you're going to do better year over year if you're buying swing lows and selling into resistance on an uptrend and vice versa on a downtrend. You're going to just do better mathematically. It's more probable that selling resistance in a downtrend is going to work out more. And you're wanting to take profits, if you're if you're taking trades off of daily closes, you're going to have to figure out how far it needs to go in order for you to take profits. You got to have a profit target. You cannot just take a long or short position and just let it ride. You will get stopped out. You won't know where to take profits. You'll be up so much money one day and the next it'll all be gone. I mean, you're going to go through all these roller coaster of emotions that just by simply putting in an entry, a stop loss, and a profit target and hitting that target and taking profits is going to just be better on your psyche than just trying to let a monstrosity of a trade to change your life. It can happen, guys, but it happens to like one person out of every 65 billion and only once in a lifetime. So the odds of you getting that one trade that's going to change your life you're better off to just take that money and go spend it all on Powerball tickets. The probabilities are just not there. But you can find huge success from sticking in the direction of the trend, buying off support and uptrends, selling off resistance and downtrends. And this oscillator can help you with that. You're wanting to take those positions on the outer edges of those regions, of those zones, if you will, of the consolidation. You're will you get stopped out doing it that way? Absolutely. It's going to happen. All right? It's going to happen. Here was a day, found support, got a higher push. This day was trading over and then just bam. That was specifically what that wick was designed to do, was to clear out everybody that was long here. 3 days later, everybody got stopped out. Then price went away. A lot of strategies are built specifically looking for the stop out. I try to do both intraday. I look for the stop run intraday, or if resistance is holding, that's good enough for me too. But hopefully that helps, Victor. I know it's difficult for people that have to work. I understand that. It is. If your job doesn't give you the opportunity to have a laptop sitting next to you all day long, then it's going to be tough for you to day trade, no doubt about it. But there are many people out there that make so much money just swing trading. Like Jordan he is not a day trader. Jordan takes maybe 3 to 5 trades all year long. He is I don't even know what you call that, a position trader maybe. But there are a lot of people that do that. Like actually the majority of successful traders in this world are probably swing traders and position traders. People that are, just buying at a price, not because of a resistance technical level, just simply, I like the price, I'm buying it here type of stuff. There's tons and tons of strategies out there for you if you do got to work all day. Long short position read that. Also wanted to push price lower. Friday was just Jerome's very hawkish comments that happened that day. Yeah, he has to be very hawkish. I've been telling you on this channel that you're going to see 6 rate hikes this year, pretty much once we got out that FOMC meeting. And I told you in October of last year that rates were going to start getting hiked probably by the second quarter of 2022 were my exact words. In October, we're probably going to start seeing rate hikes come Q2 2022. Exactly what I said in October. And that's not bullish for Bitcoin. Bitcoin is a risk-on asset. People just want to ignore that, or they want to deny it. But being in denial doesn't mean that you're right. I'm right. I can show you that by price charts. Look at all risk-on assets. They all move similar to one another. Once Bitcoin is doing its job, then when high inflation kicks in, Bitcoin will be skyrocketing, right? Once it's an inflation hedge, once it's doing what it was built to do, you have to have mass adoption before that'll ever happen. But once you get that mass adoption, once Bitcoin does become that, then in risk-on environments, Bitcoin's going to get crushed. You can't have it both ways. You can't be bullish in a risk-off environment and bullish in a risk-on environment. No asset, no financial instrument in the world has ever been able to do that. So you just got to ask yourself, do you want Bitcoin to be a risk-on asset, or do you want Bitcoin to be a risk-off asset? I mean, you can make money on Bitcoin. You don't have to just be long and strong all the time, right? There are different ways you can make money on Bitcoin. You can stake it. There's so many different financial assets out there, financial vehicles or instruments, if you will, to where, like, if you got money laying around, you can put that money to work. Less than the Israel thing. Gotcha. Heath SPX at 4480 res. Look, it was going high. At what point would you have known to get in since it started today at 4502? When I noticed that it had that 2 hour intraday. Like I said, I don't rarely look at the RSI on an intraday chart. What happened is I was looking at something on the daily and just clicked on the hourly, right? And then noticed that it was printing this divergence. So technically, you wouldn't have wanted to look to short it, right? Because we discussed this Thursday morning's live stream. Oh, sorry, I'm on the wrong one. Hang on. Well, here, I'll just do it this way. Settings, drop all these off. Boom, 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 boom. So, Thursday morning's live stream, this thing was trading. It was green on the day. If I might be wrong in saying this, but I think it was had already taken out the previous day's high at 5:30 in the morning when we were doing the live stream. So this thing looked extraordinarily bullish because you had already closed. Remember, I said that, I was like, I'm watching Bitcoin and Bitcoin is testing its 21, but I'm not looking to short it right here because the SPX already closed above it. And since risk assets trade similarly, I was assuming that Bitcoin was probably going to close bullish on the day. So that way it could finally get that daily closure above its 21 exponential moving average. And also put this into perspective as far as just if you are still a non-believer as far as Bitcoin being a risk-on asset, don't you find it funny that the risk-on asset, SPX, was playing around with its 21 exponential moving average at the same exact time as Bitcoin was? I mean, just think about that. How likely is that of a scenario if they're not trading in tandem? How likely is that? It's very unlikely, right? But a lot of these assets were trading right around a 21 exponential moving average. So since this one had already gotten a close above it, and since we had already taken out the previous day's high, it was looking a lot more bullish than bearish at the time. At the time. This move wasn't a shortable move until 9 o'clock. 9 o'clock Eastern Standard Time. That's when the trade happened. 9 o'clock, right there. 10 o'clock candle. At 11 o'clock, you just closed below support. So this trade took place over 9 and 10 o'clock. And it had the same thing going on with this divergence. 2 hour divergence. That was it. That was the only signal that decided to make me take a short. That was it. That's all. It just felt right. At first I was bullish By the time I closed the live stream, I was bullish. I was like, man, I'm looking for longs. But then I noticed that this thing had massive divergence on the hourly, 2 hour. Then I switched over to Bitcoin, and Bitcoin had divergence on the 1 hour, 2 hour, 4 hour charts. Like, yeah, something's going on there. Something's going on. So smells a bit trappy to me. So I went ahead and took a swing at it, but I had no idea you were going to see that. None. Price action trading is difficult. It's not easy. There's a lot of emotions involved, and if you're overanalyzing things, you've got 400,000 indicators on your chart, it's going to be difficult to get a daily bias. We knew we were bearish, but since the SPX had closed above the 21, the only next thing to do was wait for the next day to occur and see if that next day closes as a trap. See if it turns the 21, the candle closing above the 21, see if it turns it into a bear trap or not. Because if it does, a bull trap, because if it does, you're going to miss that trade, right? You're going to miss that trade, but you can definitely look to take the trade on the next day, right? So basically what I mean is, if you're watching an asset and you're waiting on it to close above the 21 before you change from your bearish bias back to a bullish bias, but make sure the asset is trending year to date. Find out where it is year to date. Is it bearish or is it bullish? As that will tell you the trend for that year. Screw the trend for last year. Last year does not matter. People are not taking on investment ideas or taking trading positions based on what happened on January the 14th, 2021. Nobody is doing that. People are taking entries based on what is going on right freaking now, today, this second. That is what people are using to take their entries. They do not care what happened last year. Last year is last year. It's over with. The money was made or lost last year. This is a new year. And right now, you're bearish on the year. So until you're above the 21 on a closing basis, the trend is down. And then here's another one right here. Closed above the 21. And then boom, took out the low again. Closed below. Right? This is choppy, difficult trading right here. So now what you're looking for is you're looking for a resistance test to get short. Guess what? You got stopped out here on another bull trap. But then this occurred, and then the very next day lined up a fantastic trade at daily supply. The absolute most phenomenal, best entry that you could have gotten on this day. Right there. Bing! That's the entry. And you didn't have to short the high. You didn't have to, play into this whole bull trap, bear trap scenario that took place here. But it's a difficult trade, and there is the best, most highest successful probable trade. You're waiting. You're just simply waiting. Well, today we closed above the 21. Let's see what tomorrow brings. That should be the first thought that enters your mind, right? Now, people are blowing me up and everything all day long. Now what? Now what? Now what? Are we looking for a support test? That does not bother me at all. Absolutely not, because it's the way you're going to learn. But if you're watching this video and you're hearing my voice right now, just put that in your mind. We closed above the 21 today. Let's see what happens tomorrow, because this could be a trap. Now, if we get bullish continuation tomorrow, then the next day we're going to look for bullish entries. It doesn't mean that it's going to be work. It doesn't mean that it's going to work. It just puts the probabilities on your side. That's the edge in trading. You're being patient. You're waiting for your levels, your strategy to take place. That puts the probabilities on your side. Be patient. Patience is key. If I don't know if there's not a clear signal for me, then I am not taking it. If it's not just clear as day, this one was risky. There's no doubt about it. One of the most riskiest positions I've taken all year, because this thing was bullish. Trading up about 43K. That you're no longer bearish. You're well above the 21. But we just didn't get the close. That was everything. That's why I was like, we gotta wait. And 3 days of waiting just to see how this pans out sucks. And it definitely sucks for people that are dying to take a trade. because most new traders are. I was. When I was new at trading, I would take a position, get stopped out, immediately jump back in the market. I mean, like, damn, I just got stopped out. Sell again. Bing. Damn, I got stopped out again. Sell it. It's going lower now for sure. No. Those are the things that you can't do. And that's what most new traders do, right? Oh, it's going higher here. I'm going to buy it. Get stopped out. Buy it again. Get stopped out. Shit. I'll try it again. Boom. And then in some scenarios, they just lost 10% of their overall account. And they don't even realize it. Those 3 quick buy smoked 10% of their overall equity. Yeah, you got to be patient. Patient. It's a numbers, math, time game. Math, time. That's it. Math equals time equals profitability. But it's, it is what it is. But yeah, that divergence was the only signal. That was it. That's it for you, Busari, Nayi Busari. I'm not sure how to pronounce your name. I apologize if I am mispronouncing it. That was it. What up? Gonna catch the replay this evening. Stay gay. Will do, Wes. Will do. Thank you, my friend. Heath, how do you use the hourly res on the 5-minute time frame? You mark the hourly res. You just simply mark the hourly res and you don't change it. Right? You leave it put. All right. So here's hourly res, right? Right there. Then you go down into your 5-minute time frame and then you see what happens at that hourly res. So like if you're looking to take a short entry at hourly res, then this is what you're going to be watching. Right? You're going to be watching the 5-minute time frame, see how it reacts, give it time to close, 15 minutes here and you're back under it. Then you come up again, that was a fantastic entry. And if you took profits, well, it didn't make it to the low a day, but never mind. I take that back. I don't know how big of a move that was, but it looks like a big move on a 5-minute. And then just right back up into your entry. So that would have looked bad. But if you'd have just been patient, right, it eventually rolled over. So you're marking those higher time frame levels. What I do, and especially for the new people in the Discord, is I always write it out. Write it. So like if I ever have a line on and I'm in a different chart, most of the time, like if it's a level that I am watching, it will say over here in the right hand corner what it is. You just click on the line, bring up this little icon here, hit settings, go into text, and then just write 1 hour res, right? That way you know what it is and you don't have to move it. And that way, because in some scenarios, the daily levels are the best, in my opinion. Weekly levels are good, but the problem is it takes 7 days for on Bitcoin spot price action to close a weekly candle. So you can have 3 or 4 day closes up above the weekly level and then down below the weekly level, then back up above the weekly level. You see what I'm saying? But for intraday trading, the daily levels are the best, the open or the close, depending on your direction. All right, so this is hourly res. But I'm always trying to take trades as close to those daily levels as possible, right? The daily levels. So basically, let's write this in as D-res, my bad. D-res, that's just daily resistance. That's just S-res, but you know what it is, right? Over here. Oh, sorry, up here. So there it is. There is really no hourly resistance up here because it was just a straight trend right up into it. But like, I want to see hourlies do stuff like this, trade sideways and form their own range of support and resistance so that there's 2 clear areas real close to a daily level. I'm talking like real close. So like the best trades are the ones that I find the most success at. For instance, let's just pretend that there is a daily level that cuts right through the middle of that. Let's just pretend that's daily res there. Right there. And then this is your hourly res. This is your hourly sup, your support. So this is what I'm looking for right here. This is the honey hole. because that's a daily level. And if hourly candles are showing this unwillingness to get back above and close above, then I'm looking to get short there. And I know that it's a daily level. So typically, that's when you're going to have those really good looking trades like the XMR trade, where like we literally took the position right at the daily level. So yeah, but if you start to close hourly candles above it, and I mean like, say you close a bullish candle above daily res, and then the next bullish candle takes out the previous bullish candle's high and closes above it, then what you have is you have bullish continuation going through that daily level. So that would suggest that either price is aiming at the high of the previous day, or it's just bullish. And taking a short then is probably going to be detrimental to your account. You know what I mean? It's probably not going to be a short, because typically the shorts work really, really quick. Like just a bing and then see ya. Those are the fantastic ones. When you're trading in a range at the level, it could be suggestive that the level is actually going to break because price is forming support. And you're getting higher closes going into the level. It suggests that traders are buying those lows, right? Similar to basically what I said about Bitcoin and supply, or people calling what we have now a Wyckoff distribution or a Wyckoff accumulation formation. That indicator on Glassnode shows us that there is no accumulation happening at the swing lows. And if this was a Wyckoff accumulation formation, bigger hedge funds, banks, and the people with billions of dollars, they're going to be throwing in bullish positions here on the swing lows, not in the middle, no, they're waiting to accumulate the lows. Accumulate, and then price just rips, right? You would see that on that indicator, on that Glassnode indicator. It's not there. It's not happening. So basically, people are using Glassnode charts and Glassnode data to stay extremely bullish on Bitcoin right now, when in reality, it's not. It's not, in my opinion. But I'm not that good on Glassnode. You almost need to go to Glassnode school to learn what that stuff is, even. Hang on, I'm trying to log into Glassnode, and then we'll have to wrap it up pretty soon. So if you guys got any other questions, like important questions that you want me to answer, go ahead and get them in the chat, because I got a call, and hopefully I got a doctor's appointment I got to make. Hopefully they're open still. It's a weird office hours. They ain't open on Saturday, but they are open on Sunday. But this trend score, let me see here. Where is it? Where did it go? I'm looking right at it probably. Exchange balance, blah, blah, blah. Accumulation trend score, there. This thing, man. And, I mean, they're using exchange data, right? That's how they know that these white levels or the white areas are accumulation, is because they're looking at exchange data. They got a feed directly into the exchange. They pay big money for that, and that's why to get a tier 3 on this metric, you're going to pay about $1,000 a month, because that data that they are tapped into is extremely expensive. That's why it's expensive to buy it. But here, right, this swing low, there's no accumulation happening there. None. Like, down here is a 0.1. 0.6 and higher means that you're seeing accumulation. 0.5 and under means you're not. You're not seeing accumulation. Here, 0.02. Like, literally nobody's buying this down here. Nobody. Zero. Nobody's buying this. New swing low. Nobody's buying. That means this thing's probably going to break down soon. The accumulation happened at the yearly high. That's where we were selling. That's where I was taking profits. I was targeting that move up into the yearly open, up into the yearly high, so that way I could then sell my position to these higher buyers right there. So I could sell it to those people. They want to buy it up there. Guess what? I want to sell it to them up there, because, yeah, that's the way I like to do it. And then also that's where I looked to got short as well. Because if people still want to buy it, then yeah, we'll buy it. I'll buy it. If there's selling going on there, I'll buy it. Or sell it, I'm sorry. I'll sell into them. And then boom, down it goes. Nobody's accumulating this. So on price, even though you're getting these bounces from these lows, it's not coming from accumulation. And the fact that you get up here and you make a swing high and you come back, that is also indicative of, no, it's not accumulating. So if we can see that there's no accumulation happening at these swing lows, then what is happening? Well, there's distributing going on. So they're not targeting the lows to buy. They're targeting the highs to sell. That's what is happening. Over here, you had a 3-drive topping formation. This is a classic Wyckoff formation, right? At the top of a market. 3-drive topping formation. That's called Wyckoff distribution. Retail's pumping the market up. They dump. Boom. You get a massive reaction. And then eventually it gets picked back up. And then they dump again. You get another massive reaction. This one, dump. This one, killed it. Until this happened. You got the same thing happening right here. 3-drive topping formation. Happening at the lows. Dump. Boom. Straight back down at the bottom of the range. Price goes back up immediately. Dump. Right back down to the bottom of the range. Price goes up, but this time makes a higher high. 3-drive topping formation, and then dump right back down into this formation. They're not buying the bottom, they're selling the top. Now, the way that I know I'll be wrong on this is if we make a fresh yearly high, right? Because if we make a fresh yearly high, if we become bullish on the year, then we'll know that, yeah, somebody bought it down there because it made price go higher. But it looks to me like it's being distributed, and it's just a matter of time before it breaks down. And the fact that the indicators are basically saying that this is probably a good spot to buy, that's another thing that could just give this thing fuel to the fire. Just get that move lower. But nobody knows what's going to happen. Even though that sounds good in theory, and there is an indicator to back it up, it just still does not mean that is what is going to happen. But the probabilities are there, in my opinion. Can I please look at UEC? Yeah, let me go look at it. Is that a crypto or a stock? Uranium Energy Corp. I think it's a stock because somebody asked me to look at it the other day as well. Well, I mean, it's bullish. You're seeing a pretty big pullback right now, and there is weekly divergence to bearish divergence. Swing high, swing high. You're probably seeing that divergence play out right now. Yeah, big move down. 3 days. You're into daily support, but you did close back below that 21 exponential moving average. So, in my opinion, for a day trade, this thing would be okay to short if at any point you get back up into this. So it's probably not going to happen tomorrow or the next day, right? You're probably going to see more downside. Then you're probably going to trade sideways for a couple weeks. Then this moving average is probably going to get closer and closer and closer to price. And then one day you're going to get a spike, boom, up into that moving average. That's when you're going to want to target the short. If you're short. If you're long or you want to be long, understand that you have bearish divergence on the weekly. Understand that you are below the 21 on the exponential moving average. And you are below the 50 on the daily, which suggests you're going to see more weaker price action ahead. So wait for it to get lower than where it is currently. It is in the daily support, but it will probably break soon. Next area of support is going to be 396, this swing low down in here. Right now, there's technically nothing to do with it. It's a big bearish move, probably came from what happened on SPX. And let's go look at Tesla. Same thing, man. This big, massive bullish spike was nothing more than a liquidity run, but Tesla had good earnings the other day. So it should, or no, that was Netflix, wasn't it? Was it Netflix or Tesla? No, it's Tesla. Right there it is. Yeah, great earnings. Great earnings. Nice close. It opened well above resistance. Well above resistance. So, who was it? KitKat, I think, took a long position on Tesla before earnings and took profit at resistance. She did. It would have opened up a little bit higher, but you can see that move is being sold into. Now, it could have something to do with the SPX getting ripping to the downside. So I guess, once you get below the 21, to me, I start to get a lot less bullish on these things, because you're trading right at the midpoint of the bullish and bearish control zones, essentially. So like once you start to get under that 50, then that means the bears are in control. You can always get a spike out of there, but from 50, you basically want to leave it alone until it gets to down in there, as that is when you're going to be starting to look for those buying opportunities. Probably not in a bear market, though. This doesn't look like a bear market, and don't think it is. I think it's trading well above. Here, let's go see where it's at. No, it is bearish. So yeah, I mean, year to date, you're bearish. You had one test of it, and then that's it. You haven't been back there since. So it is having difficulty going lower here, but that's because it had good earnings and people are buying it, right? People are buying it. You're right at a spot where some people will buy. Firms, other places will buy a 21 exponential moving average. That's why it has a massive effect on price. So 974.64 on Tesla, that is the last spot in the sand where I would look to be a buyer for this bullish pop to continue. If this bullish pop is going to continue and it's not just a bullish pop of a longer term downtrend. That's the problem with a lot of these assets right now. So if you close the daily below 974.64, I think it's going lower. But if it can't, then that might be a spot to look for buying it. But the fact that it had good earnings and it's already right back down to the 21, right back down to the 50, it doesn't look good. Technically, that's not very bullish when that happens. When price action has good news, price action has a big rip, and then the very next day it all gets sold off, that's not a bullish signal at all. And especially if it closes on the lows. Now, if it does come in, test support, and then get that bullish continuation, that's okay. But to basically literally give it all back and then base out as support, technically not very bullish. Great session, E. Thanks for your time and insight, bro. Stay safe. You guys do the same. Thank you, Ed, my friend. Thanks, he kind of behind the stream. Do you think Bitcoin behavior is kind of ahead of other markets recently? S&P has nothing follow it. Nope. I think Bitcoin is being traded almost exactly the same as the S&P 500. Now, Bitcoin didn't have as big of a bearish move as the SPX did. The only thing that one could say about that is simple. That's because Bitcoin is, a lot of people are buying it, but just, retail. So it's going to take a little while for these orders to get chewed through. But my opinion is Bitcoin is going to be testing $37,000. And I wouldn't be surprised to see that happen by Friday next week, right? By Friday next week. I wouldn't be surprised to see this thing tomorrow just blast lower. And then Tuesday hit 37K. Wouldn't surprise me at all. And I would absolutely love it since I'm short from up here. So that's why I'm more biased to the downside. The short trades keep working. When they stop working, then I'll be bullish. But until they stop working, it's the asset's bearish. All right? But it looks like it's going to break. If you're bullish on this is where you need it to hold. You got to close below it yesterday, but it is weekend price action, to be fair. You did get a nice little pop today, but you're right back under. It looks like this thing is going to break down, and it looks like it's going to happen pretty soon. So next area of support, $37,000. That's 3-day support. That's weekly support. All right. You guys have a fantastic day. If I missed anything, or if you're catching the preview or the replay later, you got any questions, drop them down in the comment section. As I always answer them. You guys make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.